Okay, we can start.
Do I just jump in, or would you like to make an introduction?
I'll do a quick intro and then we go. Hello, good morning and welcome. Thank you for dialing into our third annual Gold and Precious Metal Day. This periodical event is organized by Sova Capital. My name is Yuri Vlasov. I'll be your moderator on this call. Some of them might know me as a metals and mining analyst at Sova Capital. Within the next 3/4 of an hour, we'll be see and hear the presentation by CHAARAT Gold, followed by Q&A session. Today with us is Chris Eger. He's CFO of the company. Before we proceed, a necessary disclaimer, this call is recorded, so please keep your profanities to absolute minimum. And now, further ado, I'll pass the floor to Chris. Chris.
Great, thanks, Yuri. Appreciate inviting me and taking the time to talk about CHAARAT today, and thank you all for joining. So I'm the CFO of CHAARAT Gold, and what I thought I would do is to spend a little bit of time talking about the first half results, but obviously talk about the business since then. And I think as many of you would like to understand some of the progress that we've made at Tulkubash and as well Kapan. So bear with me and I'll go through a few slides. I'll jump around a bit and then obviously open up the floor for questions. So look, just to recap a few figures from the half years, we're very happy with how the first 6 months of the year has unfolded itself. We posted very strong performance at Kapan, driven by not only the higher commodity price environment, but also as a result of some of the hard work that we've done in reducing the cash cost at the mine and also managing our capex spend. So overall, the business had a healthy increase in revenue at $48 million versus $30 million of last year. And quite happily that the EBITDA of the company is a healthy positive $10 million versus effectively flat last year. So that increase in EBITDA, again, was driven by the increase in profitability at Kapan, which has been driven predominantly as a result of the higher commodity price environment, but also some of the hard works that we've done at Kapan in reworking how we operate at Kapan, specifically from a mining perspective, but also just reducing our costs across the board. Also in the first half of the year, we released our BFS update at Tulkubash, which was a key milestone, and this was back in May. We also simplified our joint venture agreement with a mining construction and contract company called Shift-I, which has paved the way to obviously financings. We've also started our exploration programs at both Tulkubash and Kyzylash, and we're due to release updates on the Kyzylash exploration program here in the next week or so. I will spend some time on the status of our Tulkubash financing, but I'll do that a bit further on in a discussion, just because it merits quite some points around where we are exactly. So a very quick recap on the business. I think many of you know this, but obviously we are striving to become a leading gold player within the former Soviet Union states. We operate and have 3 assets today, 1 operating mine called Kapan in Armenia, and then 2 development assets in Kyrgyzstan, both called Tulkubash and Kyzylash. So Kapan has been around for at least 15 years. We view it as a good, steady cash flow producer to the business, and especially in this commodity price environment, it should produce anywhere from 25 to 30 million of EBITDA and generating cash flows of 50 million plus that helps fund the rest of the business. We do have 1 significant growth project at Kapan, which is well underway, which we call it the East Flank expansion. And also I'll spend 2 minutes on that with a proper slide to explain exactly where we are in that development. The other 2 key assets that we have is Tulkubash, which is in what I call early stage construction activities, waiting for the completion of project financing, which will be about $110 million in order to get that project fully funded and into construction. And then it's about a 2-year construction period before we get to first gold pour. Tulkubash will produce just shy of 100,000 ounces of gold, roughly a cash cost of $860 per ounce. So in today's gold environment, well over $90 million of free cash flow. So quite pleased once that project gets up and going. And then Kyzylash, the largest asset on our books, close to 5.4 million ounces of gold. So an enormous amount of gold in the ground. We're progressing development of that asset nicely. with the plan of this year completing an updated exploration program in order to use the samples to define our processing technology, as it will be an underground refractory ore body that needs the decision whether we go with bio, POX, or Albion processing. So that's well underway. But ultimately, as you can see on the page, we're working towards building a business amongst the three assets that will deliver close to 500,000 ounces of gold in the next 5 to 6 years. So just to dive into a few other key developments, and again, I'll jump around a bit. I think most of you know we've done quite a lot in the business over the past 2.5 to 3 years with regards to development of the assets, albeit at times in difficult jurisdictions. One of the more key recent developments that you may have seen is a couple of weeks ago, we announced our new CEO, Mike Fraser, who will be joining the business in early January. Mike comes from South32 and was the Chief Operating Officer for the South African assets, and comes with a wealth of experience. So I think that change was made with regards to the fact that Mike has a very strong operating experience and background. And as we're looking to bring Tulkubash into construction and operations, Mike will continue and will assist obviously tremendously in enhancing the assets and maximizing the potential out of all the three assets we have, as well as looking for other opportunities, whether it be M&A, brownfield, or organic activities. So that's a key development for the business that we're quite proud to have been able to announce about 2 weeks ago. So just jumping a little bit into Kapan, again, I'm using the slides from our half-year results. Obviously, ESG remains core to the business, even so more today than in the past. It always has been the philosophy of how we operate, by maintaining a very local level of activities. We continue to support, again, the local communities, whether it's through environmental sides, you can see it's tree planting initiatives in Tulkubash, or specifically in Kapan, with regards to recognitions of employees, assisting in the building of hospital wings, kindergartens, etc. I think what's key and what I'll remind people is that, for example, at Kapan, today we have no expats on site. We operate pretty much with 100% local workforce, and we maintain strong relationships both at Kapan and Tulkubash. And it's quite important that I talk about this at Tulkubash, because in Kyrgyzstan, we continue to have strong support from the government with regards to our project. The mining industry in Kyrgyzstan remains very much open, albeit there's obviously the conflict that people know about between Kyrgyzstan and CHAARAT, but I'll spend 2 minutes on that a bit further on. I'll just jump a bit into the operating metrics, and I skipped over the COVID page, but just real 2 seconds on COVID. COVID today has pretty much obviously is still understood in the countries, but is very much a less prevalent than it was 6 months or a year ago. I would say that the sites are operating at normal capacity. They have been for some time. We had very little impact of COVID, and so that's sort of behind us at this stage. But when you look at the metrics, I think the key is we mined less than what we did last year, but at much higher grades. That was a very conscious decision, in the sense that we have reworked our mine plans to obviously be more targeted in how we target the ore underground in order to achieve higher grades, and that's what we saw in the first half, and ultimately led to higher profitability. The other key sort of attribute for the first half to highlight is, you can see we processed 70,000 tons of third-party ore versus 10,000 last year. So the asset benefits from the fact that the existing mine has a throughput limitation of around 600, 700,000 tons per year, but the mill has mill capacity of close to 1 million tons. So there's excess capacity in the mill, and as you would know, the most profitable to a business is to try and fill your mill with your own ore. But if you don't have that, the next best option is to buy third-party ore and treat it, and that's effectively what we're doing it via toll treating sort of programs, which has added several $1 million of EBITDA to the bottom line. So quite happy with that initiative, and we'll continue to treat third-party ore. However, that's not the game plan for the long term. What we see is a real benefit at Kapan, which I highlighted before, is developing the east flank. So the eastern side of the mountain, which is, we believe, will generate substantial ore to fill the mine. We're in the process of of developing the declines to then start to drill underground and to further refine the resource of this asset. And as you can see from the timeline and the cost of the project, we think that for a relatively marginal, call it $10 million capital investment, we are going to be able to generate at least another 300,000 to 500,000 tons of ore out of the ground that should dramatically increase the profitability of the asset. Can't say much more beyond those high-level figures, but we know the gold is there. Obviously, the ore body is quite contiguous in the region, but we need to also do the work to define it, create a proper mine plan, staff it up, and then develop the asset. But we do think that's roughly a 24-month time period. So quite pleased with how that development part is moving on. So maybe look, with Tulkubash has been the other key activity for the past 9 months. We've continued to use our capital to do the work necessary to get the asset into full stage construction activities. That is in regards to finalizing all the haul roads and the required infrastructure. The camp construction is close to being final. That was a significant outlay of several $1 million. In addition, we are close to finishing all the engineering works required, again, to properly build the asset. In addition, we continue to work with Shift or mining construction companies to be on standby. So maybe I'll spend 2 minutes here on where we are with the financing for Tulkubash, because the BFS that we updated back in May generated, the proper economics for banks and investors to get comfortable with the asset as a very attractive mining asset to fund. So we have been working with not only banks, but also with investment banks and looking at high yield bond options in order to fund Tulkubash, but also possibly refinance some of our existing debts. One of the key issues that we've had to navigate, though, is back in May, the Kyrgyz Republic started working with Centerra in basically, as I would say, having a conflict of interest on how the mining asset of Kumtor is being operated. And that's led to quite a lot of press that has created a negative perception on the investability in the country. So that dynamic between Kyrgyzstan and Centerra has been unhelpful with our initiatives. The reality is the mining industry in Kyrgyzstan is open, it's operating. There's many, obviously, assets that are operating fully normally. We've continued to operate without any issues. We have good support from the government. But the perception issues and the reality of the dynamics between Centerra and Kyrgyzstan have not been helpful to our financing initiatives, as investors are sort of cautious in deploying cash in this jurisdiction at this point in time. So we're still looking at financing alternatives to get Tulkubash into construction, but obviously those issues with the government are not helping expedite those initiatives. If anything, they're slowing them down. So we would still like to get going on construction activities this year, but that may not be possible. And if it is, we'll obviously look to complete the financings for Tulkubash next year, because we have everything ready to go. The people are on standby, the assets are ready to go, the technical reports are all in place. It's just a matter of the perception moving past us, the dust settling, and then investors understanding that Kyrgyzstan is still a country that is worth investing into. So we'll keep yourselves and the market updated on our progress on the financing initiatives, but that's probably the most that I can say at this point. I spoke a little bit about the exploration programs already, but I think what's important here is that we've continued to drill this year, targeting 10,000 meters of drilling, both from Tulkubash and Kyzylash. And like I said, the Kyzylash drilling results will come out here shortly, and we anticipate that they will confirm and reconfirm the robustness of that asset. And then with Tulkubash, we'll be looking to obviously extend the mine lives, but that'll come in later this year around the Tulkubash activities. But again, the results have been strong throughout the drilling campaign as we've seen the assets coming in. So look, let me just spend a few more minutes around some of the financial numbers and some of the upcoming financings that we have in and above the Tulkubash financing. So as I highlighted in the first slide, we were very pleased with the EBITDA performance for the business in the first half of the year. We hoped that continues in the second half of the year. Obviously, things are quite volatile. We've been able to reduce our debt substantially in the first half of the year, and that was off of the back of an equity raise that we did back in February and March, which was not only used to equitize the Tulkubash project, but also to reduce our debt levels. So we reduced our external debt by roughly $30 million as a result of that financing, and obviously provided a substantial amount of cash on the balance sheet, which is being earmarked for the Tulkubash project. So when we think about our overall debt levels today, our total debt sits at around 40 odd million, because the Kapan loan today is more like 20 million versus 24 million. We have $20 million of principal due at the end of this month. These are the 2021 convertible bonds that we talk about. We are in the midst of discussions with our convert holders in the refinancings of those notes. And I believe that we'll have resolution into what those notes will look like in the next 2 to 3 weeks, obviously before the maturities at the end of this month. We've waited a bit to deal with the refinancings for two reasons. One is we wanted to really play out the call it the Tulkubash financing route and see what would make the most sense. And because we were looking at one financing option whereby we were looking to combine the Tulkubash financing with the refinancing of the converts. But at this stage, we'll look to refinance the converts in isolation. And like I said, we should have that done in the next few weeks. And that's because we know all the convert holders. There's only around 20 of them. I would say they're more friends and family type note holders that have been part of the journey for the past several years. And so I think they understand very well the situation at hand. They understand that we've made good progress with our assets, but also appreciate the country risk profile that has emerged over the past several months, as highlighted before. So I would say in the upcoming months, the key initiatives, as what you expect, would be one, to refinance the converts, and then two, to continue to explore options in the Tulkubash financing. Won't spend too much time on this page, but again, this was just to highlight the robustness of the economics of the Tulkubash project. Obviously, at this stage, it's down to the financing. And again, I think we were very disappointed with what happened between Kyrgyzstan and Centerra, because it couldn't have come at a worse time, in the sense that we already hit the button on the financing, but obviously made people pause once they had heard and was trying to understand how that situation would play out amongst the two parties. And finally, look, when we think about CHAARAT, obviously we believe there's substantial upside in the share price from where we trade today. We believe the share price is depressed as a result of the overhang on the stock relating to a completion of the project financing. But all the reports, and anybody that reads it, when you look at the pure cash flows of the business from what it will achieve once Tulkubash is in operation, we believe that the company will easily be a $500 million market cap type company, and then some. So that's why we're quite happy and confident in where the value of the business will go, obviously once we get Tulkubash up and running. And so as we look to the future, the last page before I open up to questions, there are a number of announcements that we have on the go. Obviously, we've announced our new CEO. Next announcements will be updates on the exploration programs at both Kyzylash and Tulkubash. Obviously, continued updates to the market on both the project financing of Tulkubash. Obviously, we'll update the market when we land on the convertible notes. And then we'll obviously continue to update the markets on how we're progressing the Kapan East Flank exploration, but that's on track very well for the next couple of years. So again, it's been I'd say a challenging year because of what's happened with Kyrgyzstan and their conflict with Centerra. But that being said, the business has performed very well, and obviously we're continuing to work hard to do that, and we will look to not only look to try and add value in our organic side of the business, but also we do continue to look at M&A opportunities. But obviously those aren't done until they're done, and not the reason to invest in the business, but really to invest in the business and what we're able to do with our existing assets. So with that, we'll maybe pause, open up to questions. I'm happy to run through anything else, and thank you very much.
Thank you, Chris. Many thanks for a very informative and interesting presentation. Now we move into the most interesting part of this, which is a Q&A session. Dear participants, you can ask your questions in two different ways. You can either raise your hand and we'll unmute you, or you can type your question in the Q&A panel. Both are at the bottom of the screen. While we're pausing for a moment, allowing the audience to formulate their questions, I'll shamelessly use the opportunity as a moderator to ask you, Chris, a few questions. First is about your drilling program on east flanks of Kapan. It looks quite promising, and if we, let's say, do the full 43-101 in a year's time, will you how are you planning to match that on the processing side? That's the first question. And the second question is, can you, in a very broad terms, give us your expectations if we combine the existing production, let's say East Flanks exploration projects. If we combine all three projects, Kapan, Tulkubash, and Kyzylash, all together when they're all up and running, and I know it's a very much forward-looking statement, but according to your plans, what kind of production level the company can demonstrate whilst all three assets are up and running?
Sure. So look, maybe to answer the first question on the east flank, it's hard to tell exactly what will come out of it, but I know what we're targeting. In the stance of today, the existing underground mine produces around 650,000 tons of ore. We believe the east flank will be able to generate another 300,000 to 400,000 tons, and those two numbers combined will put through the mill, which will be anywhere from 1 to 1.1 million tons. The combined output of the east flank and the existing ore, we believe will generate close to 75,000 ounces of gold equivalent, I should say, because it's a polymetallic mine. So an increase of roughly 40% from where we are today, or 35%. And that's kind of how we think about it. And we think that the east flank will have enough ore to generate at least 10 years worth of mine life, if not longer. At some point, what will end up happening is the existing ore body will probably shrink with regards to the throughput through the mill, because it is an older ore body where the underground is getting deeper and narrower, and we'll start to put more ore through east flank and migrate the entire sort of processing from the existing ore body to east flank as we continue to understand the east flank over time. But from what we can tell, it's very much mimics the existing ore body. And then on the second part of the question around the overall, call it, gold potential, today we're sitting at about 57,000 ounces of gold through just Kapan. With the east flank, that'll increase to 75,000 ounces. Once we bring on Tulkubash, that'll increase to about 175,000 ounces, which will be hopefully in the next 2.5 years. And then once we bring in Kyzylash, we're probably closer to 500,000 ounces, because we believe Kyzylash will bring in an extra 300,000 ounces. So in the next 2 to 3 years, we'll go from 60,000 ounces to 175,000 ounces, and then in 5 to 6 years, hopefully to be about 500,000 ounces in total gold production.
These are quite impressive numbers. Dear participants, please ask your questions. You can either raise your hand or type them in the Q&A panel. Both features are located at the bottom of your screen. Chris, while everyone's probably formulating their question, quick follow-up. You processed 70,000 tons of ore from third party. Are you expecting there's going to be shortage of processing capacities, or are you planning to process third party material at Kapan in the near future?
Yeah, so look, I think on third party, we try and process at least 10,000 tons per month. So the 70,000 we did obviously in the first 6 months is higher than that rate. So we're looking to do about 10,000 tons per month. I would say though, because in Armenia, the operators of these mines aren't looking for long-term arrangements. We do process a third party ore quite opportunistically. So we're continuing to process third party ore this year, and we hope that'll continue next year, but I can't promise it. But I do think that we provide a very profitable outlet for the miners in the region that don't have processing technology. So we're not into long-term agreements with these other, call it third-party options, but we do believe that we provide a competitive route for them in order to offload their ore and also for us to make some additional profitability as a result of our excess capacity.
Thank you. I'm looking at your presentation, and I see that the feasibility study results for Tulkubash gives you all-inclusive sustainable cost below $900 an ounce. Looking into the second half of this year and probably looking more into 2022, and it has nothing to do with Tulkubash, it's probably more to do with your existing operation at Kapan. Where do you see cash costs going, and how? What would be the major drivers for the cash cost next year? Because we've heard, at least on the Russian side, many gold producers are guiding for higher capex, higher cost. What's your outlook on your existing operation in Armenia?
Yeah, so look, we're right in the middle, obviously, starting our budget process for 2022. We have driven our cash costs down in the past 2 years since we acquired the mine from Polymetal. So in the first half, we achieved cash costs at around $1,060. But I don't believe that we're able to continue to reduce the cash costs. I think we do have existing initiatives to continue to reduce them, but I think those are being offset by what the world is facing, which is increased pricing, either through commodity increased pricing or inflation increases. So I would say that we probably will target to have cash costs in around the same levels, maybe slightly higher. But we're talking small numbers here. But again, we'll be able to provide better visibility on our guidance once we complete the budget process and have a robust view as to what we realistically think will be for next year. But I would say that yes, the macro environment is going to put pressure on the cash costs in a negative way.
Understood. We have a question from Kirill Yankovsky.
Hello, guys. Chris, thanks for the presentation. Thanks for joining us at the conference as well. And again, thanks for the update. Obviously, challenging environment, challenging year. Not to say, but you guys, I think, operationally are doing a very solid job from what we're seeing. So congrats on that. I mean, obviously, you can't control some of the geopolitical things and obviously noise around that you see in the region. My question is regarding the project financing and financing overall. I think can you just maybe one more time go over what is the plan with, or is there a set timeline that you're shooting for the financing that you pretty much secured based on what we understand in the first half of this year, and we're ready to press the button? What is the delay? What would be the expected next time frame that you think would allow you to press the process of finally initiating, and what would be the drivers that you're looking to see? I'm assuming it's mostly local agreements and maybe agreements and confidence from some of the, I'm assuming, banks that are involved as well, right?
Correct. Yeah. So look, thanks for that. Look, in the first half of the year, what we were able to accomplish was obviously getting the equity raised for the project. So to put some numbers around the situation, the capital required to build Tulkubash is about 110 million, it's 115 to be exact. And we raised $30 million of equity, fresh cash in February, and earmarked roughly 25 million of that cash for Tulkubash. In addition, we completed a joint venture agreement with Shiftai, which contributed another 10 million of equity. So we effectively equity funded roughly of the 115, $35 million, which leads you to $80 million of additional capital required to fund the project. And as a result of the updated BFS in May, we were working effectively on two parallel paths. One path is with traditional project financing commercial banks in Western Europe that were looking to provide a typical project finance package into the business that would then obviously have first lien security on the asset, but would provide a fully funded solution to get the asset up and running from a construction perspective. That process ended up being put on hold once the Kyrgyzstan-CHAARAT situation unfolded in the May-June timeframe. And so the banks obviously have done an enormous amount of work. We have the documentation pretty much ready to go. But as a result of the Kyrgyzstan situation, they decided it was best to pause until there was visibility on how Kyrgyzstan and CHAARAT would sort of resolve their conflict, and effectively also letting the dust settle slightly from a geopolitical perception standpoint. So that was one process that we progressed quite a lot. And the second was we worked with investment banks in structuring a high yield bond, so more expensive paper, but that paper would have been used to not only fund the 80 million for Tulkubash, but also be used to refinance our existing debts in the business. So we pressed on with that bond preparation. And actually, as you may have seen from some of our press releases, we spoke to a number of investors, and we actually received some pretty healthy interest on placing of that bond, or investors taking up that bond, because the interest rates would be in the double digits, cash paying, but obviously the principal payments would only come from the cash flows from Tulkubash. So we're still talking to a couple of those investors and seeing if we can get to the critical mass with regards to enough demand in order to complete a high yield bond that would fund the business. But again, if we don't get to that critical demand, it's only relating to the fact that it's a perception issue on the country risk situation. Not one investor nor bank has criticized or caused any concerns with the assets and how we've operated the business. It's been very much down to the country risk profile and what we've been able to experience in Kyrgyzstan. So when we talk about milestones moving into the future to complete the fundraising, I think it's going to come down to as simple as much as a dust settling impact with regards to Kyrgyzstan, and people understanding that business is open. The situation in Kyrgyzstan is very much a bilateral one between Kyrgyzstan and CHAARAT. We don't have these issues, nor will we have these issues, nor we anticipate having these issues, and that our activities very much are promoting building of a mine and providing a profitable return to our stakeholders, whether debt, equity, or project finance related. So we need people to appreciate that, and then we'll be able to complete the financing and start the construction of the project. Carol, hopefully that answers your question, because I know it's a complicated one, but a long one.
Chris, thank you so much. Yeah, absolutely. I mean, I know it's not a simple one to address, and I think you guys have done an enormous amount of work, but the ground is shifting as you're working through it. So it's very clear and not an easy thing. Thanks.
Dear participants, you can ask a question by raising your hand or type it in the Q&A panel. Meanwhile, Chris, could you please very briefly tell us that Kapan is existing operation, it's 3 million or two remaining one, Tulkubash am I correct to say you're planning to do heap leaching to speed up free cash flow, and Kyzylash has refractory ore? Do correct me if I'm wrong.
And that's correct. So look, Tulkubash is a standard open pit heap leach operation that obviously, as a result of that technology and that proven technology, will drive cash costs to around $860 per ounce. So that's as vanilla as one can expect. Whereas Kyzylash, and I don't have a picture in the presentation, sits underneath Tulkubash and is a refractory sulfide deposit. Although I will say that it's not a traditional sulfide with an oxide cap. They're actually two very much different ore bodies that have folded on one another. So there's not a lot of intermingling of the ores, which impacts the recovery rates at Tulkubash. In any case, at Kyzylash, due to the nature of the ore body and the type of ore body, we will need to also look at processing technologies that can process refractory sulfide deposits, which is typically, as I talked about before, pressure oxidation, bio and Albion technologies. And look, I think the plan is, and we've engaged one of the premier labs in the United States, and the name escapes me, in order to utilize the new ore samples that we are drilling today in defining the technology that we want to utilize for the processing of that ore, and also look to get the asset into a feasibility state probably the next 2 years, and then obviously move into fundraising. So that's how we think about the development of Kyzylash and the ore body that we have at Tulkubash.
Okay, many thanks. I think looks like we are running to the end of our Q&A session. Dear participants, we have a very last opportunity to ask your questions. As I said, you can either use a raise hand feature or type your question in the Q&A panel at the bottom of your Zoom screens. I think, Chris, we fully exhausted in terms of question. Thank you very much for a very interesting presentation. Let's hope that situation with Centerra will not affect you, but very good luck, and thank you for extremely informative presentation on the company.
Great. Thank you so much for having me, and appreciate it.